Welcome to Reinsurance Point of View review series. Today our guest is Adrian Lynch. Adrian is the CEO of Blue Ocean Reinsurance Group based in Cayman. Hi Adrian, would you like to briefly introduce yourself and talk about the industry developments in captives and reinsurers?
Sure. Thank you, Eve, and appreciate the Society of Actuaries giving me the opportunity today. Yes, Adrian Lynch. I'm the CEO of Blue Ocean Reinsurance Group. I'm based in the Cayman Islands and have been for the last 10 years. Preceding that, I was cumulatively about 16 years actually with Aon between Cayman and New York, mostly in the alternative risk, captive insurance and captive reinsurance business. I came back to Cayman about 10 years ago running Aon Cayman, and a lot of our work was around diversifying the book, and a lot of our growth was in the reinsurance space. And in the last number of years, there has been a significant growth in what I would call longevity reinsurance in Cayman, being life, annuity, and pension risk transfer, some long-term care insurance. And we can talk later as to the conditions that are driving that.
We heard there are changes taking place in Cayman. What are the main changes in life, annuity, and the PRT business lines?
Yeah, so about 40% of Cayman's business has historically been healthcare business. And over the years, that business started to reduce in quantum in coming to Cayman and had an impact on the statistics from a captive perspective. So the business needed to pivot somehow and diversify. And conditions within the market have meant that life and annuity carriers are looking at somewhere like the Cayman Islands as an alternative jurisdiction to others for them to be able to write reinsurance in life, annuity, and pension risk transfer. 90% of Cayman's business comes from the US market. And we have about 8 trillion of assets under management with about 30,000 funds in Cayman. So it's a natural evolution of the journey from the funds and the investment side of the house to move into institutional investment around reinsurance and longevity. And what we are seeing in the establishment of Blue Ocean was really for the purposes of trying to preempt and support these businesses looking to establish reinsurers for the specific purpose of managing life and annuity business.
Could you also talk about what kind of services that insurance managers provide? What are you seeing from actuaries?
Yeah, so on a very simplistic basis, the regulators view the insurance managers or captive managers as an extension of the senior management or the executive team of the parent company. And over the years, insurance management has meant that you essentially surrounded the client with an infrastructure of services handling everything from financial reporting, claims, governance, risk, compliance, board-level services, and there was little by way of underwriting services, but over the years that has started to change. And particularly within the life and annuity space, we have seen a resurgence, I would believe, in the actuarial services being provided for many of these reinsurers in Cayman. And some of the insurance managers now are hiring or have actuaries on staff. And one of my partners, Graham Mackay, is a 40-year credential life and annuity actuary. The one thing we do not do or do not offer is pricing services on these blocks or flow transactions because we end up being somehow conflicted. But we can have actuaries on staff who provide asset valuations, asset liability matching, internal capital modeling build-out, and third-party review and oversight.
Could you discuss why companies are using MGA services? What are the benefits?
So what we're finding is some reinsurers are already established in other jurisdictions. They already have an infrastructure in other jurisdictions. They already have staff in other jurisdictions. And essentially what they're trying to avoid is the need for them to replicate an entire infrastructure in a different jurisdiction. So what we're doing within Blue Ocean is essentially providing them access to an infrastructure that allows them to cherry pick what services they require of us. They can be outsourced physical presence to satisfy economic substance. We can outsource our CEO or CFO or Chief Risk Officer. So the idea of the MGA services is essentially that full suite of services to that client to allow them to either on an interim basis fill a gap until such time as they actually hire their own senior leadership team, or on an interim basis as they build out and have enough business or critical mass to warrant establishing their own fully licensed presence. So for example, in Cayman, we have 2 license classifications. One is a Class D, and the Class D requires 50 million in capital and your own C-suite team. And there's that chicken and egg scenario where some clients don't wish to deploy the capital until such time as they have a transaction ready to go, or perhaps they have a transaction but they need to go and raise the capital. So we fill that interim basis for them to allow them to go and raise the capital or go and close the transaction or go and build up critical mass to then justify becoming a Class C and having their own staff. But most of our client base at the moment is in the B3 classification, which is under law and the regulations that came in requires an insurance manager, or in our case, a reinsurance manager, to manage the business.
How do you see things developing over the coming years in Cayman?
Yeah, I think at my level, I think every CEO job is to look around the corner the next 5 or 10 years. And if we were to look back 10 years ago in Cayman, we were concerned about a lack of diversification within the industry. And I think Cayman was wise in looking at the jurisdiction in terms of how it compares to other jurisdictions, whether it's Solvency II, non-Solvency II, NAIC equivalency, or qualified jurisdiction status. And you may see some developments in Cayman over the next year or two in that particular area. I think there's been a development in the robust infrastructure around governance, risk and compliance, which elevates the standard of everything that we're doing. And I only see that becoming probably more onerous, but again, elevating the standard. I do see significant growth in the life section, the pension risk transfer section of the business. Long-term care, we're seeing some. Cayman will still be a jurisdiction of choice for captives and third-party insurance companies in the property and casualty space. I think there's always going to be an issue around alternative risk financing and alternative risk management. The captive will always have a role to play in mitigating the capacity constraints that exist in the market. I don't see more capacity coming on stream. So with the consequence, I see captives having a more material role to play in the market in providing capacity. I would say P&C probably accounts for 20% of our business. I would imagine it will probably remain like that because our focus for now is on the life and annuity space. I think the next 5 to 7 years will continue to see growth. There may be some regulatory changes in other jurisdictions that may stall or mitigate some of Cayman's growth, but for now, I think we're very well positioned. When you look at the socioeconomic environment, there may be political implications and we can't ignore the elections that are taking place all around the world. There is a shift to the left or shift to the right. That always has a knock-on impact in terms of the comfort level around certain jurisdictions. I think in times of political uncertainty, offshore jurisdictions always do very well. And I'm not entirely sure the world could be but more economically and politically uncertain these days. And I'm very bullish as to Cayman's future. And I think from Blue Ocean perspective, I think we're starting with Cayman, but we are looking at other jurisdictions likely Bermuda, likely Europe at some stage.
Thank you very much for sharing this information.